I mean, essentially, the home has to be livable and not have any safety hazards, or they're not going to give you the money. You're ready to buy a home, but maybe you just don't have quite enough cash in the bank. Well, that's what this video is about. So there's a myriad of programs available to help people get into homes for less money down than you used to have several years ago. Gone are the days when you had to have 20% down to buy a home. Yes, if you don't put down 20%, you will have PMI, and I'll touch on that a little bit later in this video. But if you're new here, my name's Ryan. I run the Top at Connections real estate team here in Tulsa, serving, of course, Tulsa and the surrounding area. So if you're needing help with all things real estate, of course, reach out to me. We'll be happy to help you make that smooth move in the Tulsa area or to the Tulsa area if you're coming from out of state. Without further ado, though, let's jump back into the topic of today. So down payment assistance comes in multiple forms, as I mentioned. The biggest version of down payment assistance was the creation of the FHA loan. So an FHA loan is not actually a first-time home buyer loan. It is actually a loan that just has less stringent requirements for qualifying for that loan. Additionally, you only have to have 3.5% down versus the 5% down with conventional. So it does have a little bit less down payment requirement. So it does help lessen the blow of the cost needed to purchase a home. Other great options are actually VA loans. If you're a veteran, that's a 0 down payment. It's a 100% loan. You can finance the whole thing. There's also USDA loans or rural development loans, which are also 100% loans as well. So you don't have a down payment with that either. Just has to be in a qualifying area. And then lastly, if you're Native American, HUD 184 loans, I believe they are called, is the technical term, or a Native American loan. I believe the down payment for that is only 2.8%, so even less than the FHA. And if you are in fact a first-time home buyer, you can also use a conventional loan if you so choose. First-time home buyers can do 3% down with conventional. So that's the overview of the loan types and their down payment requirements. But maybe you're thinking, you know, I don't even have enough cash to do the 3.5% down. Okay, well, that's where down payment assistance can come in to help even more. So down payment assistance programs vary from state to state, but I can tell you in Oklahoma, our most popular one is OHFA, or OHFA. They set aside about $40 million to help people get into homes. You don't even actually have to be a first-time home buyer to utilize this program, but a little bit of how it works, it's actually a soft second mortgage, or a second mortgage, or a soft second is what it's referred to as. There's no additional fees or interest on it. However, it is attached to your loan on the home. So if you don't live in the home for at least 3 years or more, you're going to have to pay that loan back. However, if you live there past 3 years, then the loan is forgiven and you don't have to pay it back, essentially. There's some more stipulations, but that is the gist of it. You can get up to 3.5% of the purchase price with the OHFA program. So 3.5% of, say, $250,000, that's a pretty good chunk of change to help you with your down payment on buying the house. So essentially the OHFA would cover the 3.5% if you're going with an FHA loan, if you're paying attention from earlier in the video, because the down payment with an FHA loan is 3.5%. Now, another form of closing cost assistance can also be asking concessions of the seller. So it's not uncommon in a real estate transaction for a buyer to ask for seller concessions. For example, say I make my offer of $300,000 and I need to ask for $5,000 of seller paids, and I can use that money as the buyer towards my closing costs. I can use it towards my down payment. I can use it towards a rate buy down. Really doesn't matter, but it's not uncommon to see that, and those are referred to as seller concessions, which essentially is another form of down payment assistance. Additionally, if you are a Native American, you also would behoove yourself to look into the down payment assistance programs offered through your tribe in your state. So for example, in Oklahoma, the Cherokee Nation is a really big tribe here. And if you are a Cherokee Indian, then you get, I believe, up to $20,000 towards closing costs, your down payment, whatever you want to use it for, to help you buy a home. Now, I will say their process is a little bit more stringent as far as, of course, one, you have to be part of the Cherokee tribe, and two, there's first-time homebuyer classes and things that are a part of that process. So it's not like I'm going to go buy a home tomorrow and let me call the Cherokee Nation on my way to write my offer. It's call the Cherokee Nation first and get that process rolling if you are planning on buying a home this year. You do have to live in the home for at least 10 years, and if you move before that, you'll have to pay it back. And that's at the time of this video. They do update it every once in a while, so make sure you check with them on what the requirements are at the time you apply for it. Additionally, though, there are going to be requirements that the house has to have too. Like, it's got to be safe. You can't have any electrical problems, water problems. I mean, essentially, the home has to be livable and not have any safety hazards, or they're not going to give you the money. And my last thing I want to touch on is PMI, or private mortgage insurance. A lot of people, if you get on social media, will be like, oh my gosh, you have to put down 20% or you're going to have PMI. PMI is just another tool to help people get into the real estate game earlier instead of waiting, because the longer you wait, the more equity you're losing by not building equity by making your mortgage payment every month and having that money stored in your house. It's like a forced savings account, but you're also losing out on the appreciation of real estate. Yes, prices go up and down, but on a grand scale, they're always trending upwards. So the earlier you can get into the real estate game, the better. And with PMI, it's really not that expensive. I mean, it's going to be maybe $100 to $150 difference on your payment at the most, and that's like on the high end. So don't worry about private mortgage insurance. Just focus on the mortgage payment. If you like the house and you're comfortable with the payment, that is a win-win combination, because the earlier you can get into the game to buy a house, the better, because like I said, you're getting equity and you're also getting that forced savings account and the appreciation that comes with that, and you're building wealth for your future. So of course, let me know if you have any questions. I hope this was helpful to you. Of course, subscribe for more real estate information, as well as home tours and local insights. I share all of that stuff on this channel. And of course, if you are thinking of making a move into the Tulsa area or within the Tulsa area, I would love to be a real estate resource and help you out any way I can. That's all I got for now. I'll see you in the next one.